Japan's economy grows 0.9% in the third quarter on an annual basis. US retail sales rise 0.4% in October. And gold prices are on track for their worst weekly performance in 3 years. Hello, good evening, and welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on the latest economic trends and developments. We start off with Asia, where Japanese governmental data showed that its economy grew 0.9% annualized in the third quarter. On a quarterly basis, GDP rose 0.2%. Private consumption, which accounts for over half of economic output, surged 0.9%. Despite weaker capital spending, stronger consumption supports the central bank's recovery outlook, driven by higher wages and spending, helping Japan stay on track to meet its 2% inflation target. According to National Bureau of Statistics data, China's industrial output grew 5.3% in October, slowing from September's 5.4%. This comes as Chinese policymakers face mounting pressure ahead of Donald Trump's return to the White House, where he has promised higher tariffs on Chinese goods. Retail sales rose 4.8%, boosted by a week-long holiday and early Singles' Day sales. Property investment fell 10.3% year-on-year, deepening from the previous month's decline, though property sales showed signs of stabilization, suggesting the impact of policy stimulus. And for more on that, as we were saying, China's real estate market showed signs of recovery in October, with increased second-hand home transactions and a narrowing of price declines, boosting market confidence. Following a policy stimulus at the end of September, transaction volumes in key cities surged. In Beijing, second-hand home sales rose 30.8% month-on-month and 63% year-on-year, the highest since April 2023. Shanghai saw a 56.2% month-on-month increase and 70% year-on-year increase in transactions, while Shenzhen recorded a 91.7% month-on-month increase and 120.5% year-on-year rise. Still in China, though, new home prices dropped 5.9% year-on-year in October, the largest decline since 2015, marking the 16th consecutive month of falling prices. However, the monthly decline slowed to 0.5%, the smallest drop since March, signaling potential stabilization in the property market. The decline in home prices eased across all city tiers, and 75.9% of respondents in a National Bureau of Statistics (NBS) poll expect prices to remain stable or rise in the next 6 months, up significantly from the previous poll. 3 out of 70 cities reported year-on-year price growth in October, up from 2 in September. The government noted that supportive policies were starting to show results, with improving developer cash flows and signs that the market may be bottoming out. Moving to the United States now, the Commerce Department reported that retail sales rose 0.4% in October, slightly above expectations, following a 0.8% increase in September, boosted by autos that masked more mixed performance elsewhere heading into the holiday season. However, core retail sales, excluding autos, cars, of course, gas, building materials, and food services fell 0.1% in October after a revised 1.2% gain in September. These core sales, which reflect consumer spending in GDP, were previously reported to have risen 0.7% in September. While consumer spending supported economic growth in the last quarter, momentum appears to be slowing in the fourth quarter. Total sales for the period of 3 months ending October rose by 2.3% from the same period a year ago. Federal Reserve Chair Jerome Powell said on November the 14th that it's too early to adjust the Fed's policy stance in response to President-elect Donald Trump's return to the White House. Speaking at a Dallas Fed event, Powell emphasized the need to see the specific policies Trump and the new Republican-controlled Congress will pursue before making any policy changes. He noted that the Fed has time to assess the potential economic impact of these policies. Powell stressed the Fed needs more clarity before updating its economic forecasts or adjusting monetary policy, saying the answer isn't obvious until we see the actual policies.
The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully. I think it's too early to reach judgments here, and I'll tell you why. So the job of staff is to go, and be very nimble and make assessments in real time, much like capital markets do. The markets are pricing in assessments of what policy changes will be made and what their effect on the economy will be. And staff will do all of that. I think policymakers are going to wait longer to see what the actual effects will be.
Federal Reserve Bank of Boston President Susan Collins has said that another rate cut in December is on the table, but it's not a done deal. Collins added that there's more data that we will see between now and December, and we'll have to continue to weigh what makes sense. She doesn't see an argument for maintaining restrictive policy when there is no evidence of new price pressures, and the old dynamics are perhaps unevenly and gradually resolving over time. In Europe, European Economic Commissioner Paolo Gentiloni has cautioned that heightened U.S. protectionism under President-elect Donald Trump could severely harm both the U.S. and European economies. His warning comes amid Trump's proposal to impose a tariff exceeding 10% on all imports to the United States, Europe's largest trading partner. Gentiloni emphasized the interdependence of the EU and the US economies, describing their trade ties as a stabilizing economic and political force. He added that any protectionist measures would disrupt this balance, particularly affecting key exporters like Germany and Italy. Gentiloni noted that increased tariffs would exacerbate challenges faced by EU manufacturers, while also fueling inflation in the US, potentially destabilizing its economy.
GDP growth is estimated at a possible protectionist turn in US trade policy would be extremely harmful for both economies. And the Commission will work with the incoming US administration to advance a strong transatlantic agenda and ensure that international trade channels remain open while making them more secure.
Paolo Gentiloni. Now, Hungarian Prime Minister Viktor Orban has called on the European Union to rethink its sanctions against Russia, citing their role in sustaining high energy prices and reducing the bloc's economic competitiveness. Orban stressed the need for lower energy costs, linking this directly to the EU's sanctions policy. Prime Minister Orban pointed out that European businesses face significantly higher gas and electricity costs compared to their US counterparts, making it harder for Europe to compete globally. He emphasized that addressing these disparities requires revisiting a sanctions framework. The UK economy contracted by 0.1% in September, and growth for the third quarter slowed to just 0.1%, according to data from the Office for National Statistics. The decline was driven by stagnation in the services sector, along with declines in manufacturing and construction sectors. This marks a slowdown from the 0.5% growth seen in the second quarter and falls short of the 0.2% expansion forecasts by economists and the Bank of England. Britain's Treasury Chief, Rachel Reeves, said that she is not satisfied by the official figures showing the Britain's economy rebound from recession slowed down sharply in the third quarter of the year, with most sectors stagnating. Reeves added that improving economic growth is at the heart of everything that she is seeking to achieve, which is why she is not satisfied with these numbers. She highlighted plans to focus on investment and reform to drive future growth.
The interest rates would continue gradually to come down. That's welcome news for families.
According to the European Commission's autumn forecast, Germany's economy is expected to significantly underperform the Eurozone average until 2026. GDP is projected to contract by 0.1% in 2024. This slowdown is driven by high uncertainty, weak consumption, investment, and deteriorating trade outlook. Germany, the world's third largest economy, is forecast to shrink for the second consecutive year in 2024, making it the worst performer among G7 nations. However, domestic demand is expected to recover in 25-26, supported by rising real wages and easing inflation. Economic growth is projected to be 0.7% in 2025, with a slight acceleration to 1.3% in 2026, still below the Eurozone average of 1.6%. A report from the National Bureau of Statistics reveals that food inflation in Nigeria surged to 39.16% year-on-year in October, up from 37.77% in September. This increase was primarily driven by rising prices for key staples such as rice, maize, bread, potatoes, and cooking oil. Overall, the country's inflation rate climbed for the second consecutive month, reaching 33.88% in October, up from 32.7% in September, with food costs being the main contributor to this rise. Oil and gas giants Total Energies, BP, Shell and Equinor have pledged $500 million to improve access to affordable energy in sub-Saharan Africa, South and Southeast Asia. This commitment represents around 0.7% of the $70 billion in combined profits the companies earned in 2023. The announcement made during the COP29 climate summit in Azerbaijan aims to fund projects across the energy value chain, including solar systems, microgrids, transport, storage and cleaner cooking technologies. The funds will be managed by a private equity firm and distributed over several years. Oil prices were heading for a weekly loss on worries about the warning Chinese demand and expectations of fewer U.S. Federal Reserve interest rate cuts. Brent crude futures dropped 1.34% to $71.59 a barrel. U.S. West Texas Intermediate crude were down 1.37% at $67.76 a barrel. Gold prices held steady near two-month lows and were on track for their worst weekly performance in over 3 years, and expectations of slower interest rate cuts by the Federal Reserve. Spot gold was little changed at $2,567.89 per ounce. Prices have fallen more than 4% so far this week, touching their lowest since the 12th of September. US gold futures were also flat at $2,572.50.
Gold prices held steady near $2,565 per ounce in early Friday trading, yet the precious metal is on track for its sharpest weekly decline since June 2021, dropping 4.4% this week. Thursday's session saw gold hit a two-month low at $2,536 per ounce, marking a 9.1% drop from its all-time high of $2,790 recorded last month. The rallying US dollar, which reached its highest level in a year, continues to pressure gold prices, making the metal less attractive to non-dollar investors. The dollar surge follows Donald Trump's presidential election win, which has fueled expectations of higher inflation and more cautious interest rate cuts by the Federal Reserve. Fed Chairman Jerome Powell's recent comments emphasized a careful approach to rate reductions given steady inflation and economic resilience. Markets now estimate a 59% chance of a 25 basis point rate cut in December, down from 83% earlier this week, reflecting growing uncertainty about U.S. monetary policy. Gold's performance underscores the impact of shifting fiscal and monetary expectations, with analysts noting that high interest rates and the strong dollar continue to divert investor interest toward alternative assets like government bonds.
Now, joining us from Cairo to discuss the latest developments in the gold market is Mr. Ihab Wasif, the head of the Gold and Precious Metals Division at the Federation of Egyptian Industries. Thank you for being on the program. Now, what are the main factors behind the record weekly decline in gold prices over 3 years?
Hello first. The gold prices have had a big flip during the past 2 weeks since the announcement of the American presidential elections. This is because of the questioning the market, how the market will be going after the presidential elections, what will be the economy strategy that Mr. Donald Trump will be doing, how he will deal with the inflation that is in the American market, in the European market, all over the world. What's the strategy he will be using for picking up the economy of the United States? So that made investors look at the dollar as a big investment for the last 2 weeks, we can say, or like say 10 days. So they have put all their pressure on the U.S. dollar to the other currencies. So this made people go out of the market and such as in precious metals and invest in dollars.
Okay, and how has the strong U.S. dollar impacted gold demand and also the pricing dynamics?
As I told you, like the investors, they have been putting all the focus on the dollar, so they had to sell the gold that they have to put the investment in the dollar. So this has made a big of supply to the gold price, which has impacted the gold prices to go down. We can see like 14% of the gold price has been down during the past 10 days since the presidential elections. This is a big number. This week, just week, we had more than 4 or 5% slip in the gold price. Plus today we have around $7 since the morning. Now the gold price is $2,562.4 in the ounce. So this is another drop in the gold price. We cannot expect what's going on or what will happen in the short term.
And do you expect the recent dip in the gold prices to trigger increased demand from central banks?
Of course, we have seen some countries are investing in gold or buying gold to keep it as a reserve for them, especially China. China was doing it in the past year, let's say last 1 year, except for the last 2-3 months, they didn't buy gold, but they were putting all the reserves in gold instead of putting it in currencies, which means that they were creating a big demand on the gold. It was stressing on the gold demand on the market, and then it impacted the price as well to the international stocks. So we see that the gold price was affected so much by the demand of the countries that are making the reserve in gold.
And how have expectations around the Federal Reserve's interest rate decisions influenced the recent performance of gold? Are there any comparisons between the two?
Oh yes. Of course, it has a direct impact. Like we can say that when the Federal Bank or the Federal Reserve they dropped the interest rate by 25 points, which has happened last week. This has affected the gold price as well. But we still waiting to see the strategy that Mr. Donald Trump will be doing to the economy of the United States. Will it keep on going down the interest rate, or will they keep it for the year 2024? This is all we still don't know what will happen. Just we have to wait a little for I think more than 30 days until Mr. Donald Trump gets into the president, the White House, and then we will see how he will be acting with the economy of the United States.
Well, thank you very much. Ihab Wasif, the head of the Gold and Precious Metals Division at the Federation of Egyptian Industries. Thank you so much for being on our economics program tonight. Now, let's take a look at the markets. Well, global markets had a mixed performance as European shares opened lower, while Asian stocks were mixed after key economic data came out earlier today. In the United States, early trading, the S&P 500 fell 0.7%, the Dow Jones Industrial Average dropped 0.3%, and the Nasdaq sank 1.2%. In Europe, Britain's FTSE 100 lost 0.4%, Germany's DAX dropped 0.6%, and the CAC 40 in Paris was down 0.8%. In Asia, Tokyo's Nikkei 225 gained 0.3%, the Hang Seng in Hong Kong slipped 0.1%, the Shanghai Composite Index dropped 1.5%, while South Korea's Kospi edged 0.1% lower. Well, we're almost finished, but let's get a recap of those headlines. Japan's economy grows 0.9% in the third quarter on an annual basis. US retail sales rise 0.4% in October. And gold prices are on track for their worst weekly performance in 3 years. And that's all for today's Economic Bulletin here on Qnews. Stay connected for more updates and more news from us here at Qnews. Thanks for watching.